Hi, everyone. My name is Heather. I'm the president of the board here at Astro. I'm also on the line with another team member, Larry. Thanks for joining us for today's roadshow stop to Orlando. Joining us are some Orlando experts and homeowners. So we have from Vrolio, Erica, the CEO. Thanks. And then Melissa is also part of the Vrolio team. And then our homeowner, who actually has 2 homes in the Orlando area, so is quite an expert herself, is Leslie Deering is joining us today. So thanks to all of you, for joining us. We're hoping to have one more participant with Host Financial. So we may have one more addition to the team here part of the way through, but we'll jump in. This is a 30-minute power session. We want to deep dive on Orlando and tell you a little bit about the Association for Short-Term Rental Homeowners. So I'm going to share my screen and we'll get started. And Larry, can you see the screen okay?
Yep.
All right, great. So for those of you that haven't heard of us before, the Association for Short-Term Rental Homeowners launched this year. And then for these types of events, we're doing these virtual road shows since it's a little tricky to be there in person. We hope to do that more in the future. But for the road show agenda today, we'll intro who we are, talk about the market, spend some time talking to Leslie, and then Vrolio as an expert real estate team, touch on financing, and then wrap it up. So this is our team. We bring a mix of experience from running our own short-term rentals to working in the lodging industry from the tech and operations and marketing side. And we're passionate about professional development for short-term rental homeowners and really trying to help folks cut through the clutter of social media and getting access to accurate information. But we approach short-term rental with kind of this lens and trying to help homeowners. So we see, many of the homes are self-managed, over 50%. And we learned even more about this with the Airbnb IPO. So we know that short-term rental homeowners that are managing themselves are a growing segment. We also, the trend here to the right, I'll kind of go clockwise, increasing distribution opportunities. So, the technology advances are making it easier to be an entrepreneur in this space and run your own home. So from Book Direct and what Google's doing with Google for vacation rental, just lots of opportunities, marketing standpoint, continuing to grow. Then consumer demand. With COVID-19, this has been accelerated, as we all know. In many markets, short-term rental homes have seen an increase over last year. But in other markets where maybe there are still some declines, any lodging demand into that market, there are still folks choosing short-term rental over hotel and maybe trying this type of accommodation when they've never tried it before. So a lot of positive momentum for this space. And so a little bit more about Astro, taking those trends into consideration. We've developed this association to focus on education. So this is our website, free for everyone. We have blog content, articles and resources, and a business directory for your technology or service needs. But then once you become a member, you have access to the community where we're helping organize by topic expert resources. So top posts and member collaboration can happen here. The other area is our education. So once you're a member, you actually have access to these free 1-week power courses. And so for next year, we're kicking off with how to market, revenue management and pricing, and then investment strategy and financial tools. So these courses are developed by bringing experts together into a committee and informing what should be best-in-class content. So we've had some great participation. Vrolio is obviously part of the investment strategy committee, so helping us with that. And now we're going to shift gears on Orlando. So thanks to AirDNA for helping us with some data. I'll hand it over to Larry to talk about Orlando.
Thanks, Heather. So obviously, it's no surprise to anyone that COVID-19 has had a huge impact on the tourism industry, and in particular Orlando. If you can look at the occupancy in the first few months of the pandemic, from March through June, Orlando saw roughly about a third of the band leave the market, and it's slightly returned a little bit since July. Properties have been seeing about 9% year-over-year decreases in occupancy. So certainly a good trend, and we kind of expect the trajectory to kind of close the gap a little bit as people's willingness to travel is continuing to improve. However, there are some question marks out there, and how these current wave of cases could actually see the kind of the trajectory change a little bit. On a interesting note here, something that where the Orlando market's kind of performed a little differently than other popular short-term rental destinations is in rate. So through most of the early months of the pandemic, rates didn't actually decrease rather significantly. However, in the fall, starting with the fall, as occupancies kind of started to return, we actually saw a decrease in the average rate for short-term rentals. And I think there's a few factors in place here. I think that the market is, for Orlando, it's coming from a short distance, and people are more opportunistic, looking for a good value than what they would have normally been willing to pay, or maybe they wouldn't have gone. So it's a more spontaneous trip that they wouldn't have budgeted as much resources for. So you kind of see a shift in what people are willing to pay for, and that's likely to continue until widespread travel is prevalent throughout the U.S. and for international markets to come back in. And so yeah, so it's definitely an interesting trajectory and a lot of open questions. Obviously there's some major demand generators in Orlando, and once the market largely depends on how quickly those demand generators return to closer to normal operating levels.
But we do know there's pent-up demand that will come back. It's just a matter of watching it, engaging when, right, and all those signs. But there's certainly pent-up demand for Orlando, for sure.
Yeah, certainly. And then so I highlighted a few news stories that have been taking place in Orlando. Obviously, earlier this year, we saw lots of coverage about the shutdowns of short-term rentals and the fight that it took to get them reopened. Obviously, I'm sure many of you are aware that short-term rentals were closed while hotels were not, and it took a kind of a large motivation of property owners and managers to get the governor to agree to open up short-term rentals and demonstrate that the industry was as safe as hotels. There's also been some news about the taxes and whether or not the platforms would need to collect a bed tax. Something that we see across the country, and Orlando is no exception, is a focus on problematic houses with parties and noise issues. So Airbnb and VRBO have really cracked down on offending properties. It certainly makes the news. And then I also shared kind of some financial, I think there's been a lot of news about the investment prospects for Orlando and what it means on a short-term and a long-term basis. So there's an article here from Motley Fool about what to expect from real estate prices in Florida. As a whole in the country, we've seen real estate prices hold strong throughout the pandemic, and that's largely been true in Orlando too. So and I think there's a high degree of confidence in the long-term investability in this market, and especially for short-term rentals, where consumer preferences have really only solidified throughout the pandemic.
Yeah, absolutely. No, this is great, and a lot going on. Like we said, a lot of pent up demand. So I'll keep it moving, and we'll pass it over to Melissa to take us through a little Q&A. And I do think we will have Daniel. So when we get to that part, Melissa, I'll jump over and see if we can get him on the line.
Okay, great. Well, we're going to start with Leslie Deering, who's a owner of a short-term rental, or 2 short-term rentals in the Orlando area. And Leslie, could you tell us how you got started in the business?
Well, my husband, Darcy, is always looking for the next big thing. And he was reading a Fortune magazine article, and it recommended the Orlando area to invest in. And that was towards the end of 2016, March 2017, we bought our first villa in Windsor Hills. And then we acquired another one in September of 2018. So, or August, I don't know, but it's a blur. But anyway, so that was how that's how we got started. He just started researching it. He met Erica, and the rest is history.
And the second property, is that also in Windsor Hills?
Yes, we're sticking in the Windsor Hills Resort because we find it to be one of the best managed resorts in the area. It's got awesome security. It's got awesome amenities for the guests above and beyond what we offer. So we're just going to stay there, and we like having our homes together because we can attract larger groups and larger family groups.
Okay, great. Have you seen any challenges in the area?
Toilet paper. No, people are always, I mean, every guest brings their own concerns to the table. I would say the vast majority, 99.9%, have been lovely people. We worked mostly with an international guests, but since COVID, we've come into, but it's just the everyday things that, you're only as good as the information that you provide your guests. So you just have to make double darn sure that your information is complete, and they know when they get in the door, there are no surprises for them. So, but by the vast majority, there haven't been any real surprises, except people want more toilet paper. That's the bottom line. And that wasn't a pun. That wasn't a pun either.
Gotcha. That was great advice. I have a question from the audience, and she's asking if Orlando's still a solid investment market. Do you feel, Leslie, that it's oversaturated with short-term rentals? Do you feel like you're constantly competing, or do you still feel like you're getting occupancy?
Of course we're competing. I mean, that's the name of the game. You have to have the new cutting edge, your decorating, your everything has to be up to par. But Orlando is a tourist destination. I don't think it's possible to really oversaturate the market as long as you maintain a premier property that is appealing to guests. That's not going to be a problem.
Yeah, good.
Great.
Have you seen guest and market changes with COVID? I think you mentioned a little bit about the international guests. I know have declined.
Yeah, there's been some real heartache there for them. I mean, we've dealt, because these people, form relationships with these people too, especially returning guests, and it's been really hard on them. And so you really feel that. Right now, our guest pool is like within 700 to 800 miles, I would say, of the Orlando area. So that's where we're basically serving. We have not slashed our rates like some homeowners and townhome owners have, things like that, because you get what you charge basically. Mm-hmm. So you have to maintain you've got to maintain rates, and we're limping along, but we're okay. We don't have the huge financial pressures we think other homeowners have probably had to withstand. So that's a blessing.
Okay, good. Okay, well, thank you, Leslie. We're gonna move on to Erica. She is an agent in Orlando, and she's the CEO of Vrolio. Erica, has the second home or investment property climate been like with COVID-19 that you've noticed?
Yeah, so we kind of talked about this back in April when COVID was hitting. We made some predictions about what was going to happen in the market. And it kind of followed that same trend that we thought it was going to follow, where we saw people kind of pull back the first few months COVID started. They were kind of afraid to invest. The market kind of got slow. Owners got scared. People put their house on the market. And then around June, July, August, things just picked back up again. And we're as busy as we've ever been. So we don't have, what we're seeing is investors with confidence in this industry, investors with confidence in this market. We have owners that already own properties here that are purchasing more during this time right now. They're looking to pick up a second, a third, a fourth property. We have new investors coming from other parts of the U.S. It's mostly U.S. buyers right now, but domestic buyers coming from other parts of the U.S. buying here, prepping for next year, getting ready, gearing up. So we haven't seen since around June, July, we haven't seen anything change from the beginning of the year. We did see it dip off, a little bit during the COVID when it first started, and we expected that to happen. But investor confidence is back. It's been back. Our clients are still purchasing homes, and new clients are still investing here. I did want to talk a little bit about some of the points that were brought up when you were talking to Leslie, and also some of the things Larry talked about. Larry mentioned an article from the Motley Fool talking about what prices are going to do here. And I did want to say one thing that I don't know that was in any of those articles you brought up, but the current market in Orlando in general, we have so many people moving here from the Northeast, New York, Pennsylvania, all those states up there coming down here. So many in massive droves that it's actually driving prices through the roof in the residential side of things. And people are getting almost insane prices what they should have gotten this year for their home because of this like mass influx of people. That doesn't hold true into the vacation rental market, but the vacation rental market has held its value, and it continues to hold its value through all of this. We haven't seen prices dip once. And a lot of investors that pulled back in March and April because they thought prices would dip towards the end of the year, it hasn't happened. And we're not seeing any indication that that will happen until at the very soonest, the end of 2021. So prices have held strong. We have a huge demand of people trying to buy here, both on the vacation rental side and the residential side. And we don't think prices are going to drop anytime soon. And investors seem to be okay with that because they'd rather get into the market and not miss out on the massive amount of people that they think will be coming in next year once the vaccine is out and travel opens back up versus waiting until the end of next year to see if prices dip. Another thing about prices dipping in the second home market, vacation rental market in Orlando that you have to consider is not everybody that owns here has a mortgage. A lot of vacation rental owners pay cash for their homes. And Leslie, you could probably talk about this a little bit, but the owners that pay cash for their homes, they don't need to sell their house. They're holding it because they can afford to hold it. So you do have a percentage of people that have a mortgage on these second homes and vacation homes that might be hurting a little bit by the end of next year, but there's a large majority in the vacation rental market in Orlando that don't. And you're not going to see those houses hit the market and drive prices down. So those are some things to consider. And another thing, when Heidi asked the question about this being a saturated market, what Leslie said is, yes, there's competition here, but I want everyone to understand that there's a saturation cap that every market will hit. And Orlando hit its saturation cap a few years ago. And what a saturation cap is when you really can't build much more than what you have going on right now. You've kind of hit a saturation cap. And what that means for an investor is that what you see is what you get in terms of your competition. So you're going into a market that's been tried, true, proven, it's a well-oiled machine, and you know who your competition is. You know all the new construction that's going to be built. You know the new neighborhoods that might pop up because they're already here, and they can only go further out. They can't get close to the sweet spot. Yeah. So being that Orlando is a saturation capped market, it actually presents a better opportunity than some younger markets that still have a lot of room to grow, where when you invest in those markets, it looks good now, but what's it going to be like in 5 years from now? And what Leslie said is that you're only competing with the top tier homes. As long as it's the 80-20 rule. If you're going to be 20% of the owners doing 80% of the business, you're competing with 20% of the owners doing 80% of the business. So your goal is to become one of those 20%. And Leslie had some really great tips on how to do that. So that's my take on the whole market here in Orlando.
Okay,
All right,
great.
if I jump in, Melissa, with a little
Yeah, go for it.
question. What I loved hearing what Leslie said about, holding rate, and that, just by discounting, you're not necessarily going to drive more demand anyway,
No.
right? But what you said, a combination of things, Erica, could be interesting. If more people are moving there, is it possible that some of this inventory that was short-term rental could be transitioning to full-time residents? So if short-term rental supply goes down, that could help with the ability to raise rates even as a short-term rental homeowner. Do you think that short-term rental supply will kind of stay the same, or could it even slightly go down if there's more permanent residents?
Yeah, I mean, it's possible. I haven't seen a lot of that happening yet. Leslie, I know you and Darcy are on the board in Windsor Hills, so maybe you'd have some more visibility into what's going on there. I haven't seen a lot of these homes being converted into residential homes, only because the way that these neighborhoods are designed here is they were actually, most of them are purpose built. You do have some older communities that are residential type communities, and yeah, you might see some turnover there, but those weren't your competition anyway if you were in the premier area of Orlando, the sweet spot. In that premier area where Leslie's at, in that sweet spot of Orlando, these are purpose-built communities, so it's going to be highly unlikely that you see a turnover from short-term rental to full-time residents there. It could happen though. I mean, who knows what 2021 holds? I just don't think it will. But Leslie, what have you seen in Windsor Hills? Have you seen any of that?
I'm seeing an uptick in homeowners moving there, but I think it's more out of a financial necessity, perhaps, than it is, but then again, I think we're holding our own pretty well with keeping it as a short-term rental resort for people. There are some permanent residents there, but not to any great extent, because like you said, Windsor Hills especially is not really intended for a long-term residence. It's short-term because of its just based on HOA fees alone. You have to think about that.
Yeah.
I thought I'd jump in and see if we do have, let's see if we do have Daniel on the line for these last few minutes. Looks like we were not able to get him to join. Unfortunately, I think he had something pop up, but we did have Daniel from Host Financial. And Erica, if you don't mind talking a little bit about the work you've started to do with them and what they do.
So I can't speak too much about Host Financial because I really don't work for the company and I'm not deep into what they're doing, but I can speak generally on short-term rental mortgages and how that's been going. And I'm happy to do that. So the clients that we've been working with over the last few months, we haven't had any problems seeing them get financed. Financing has not become an issue at all. We're still looking at a lot of people doing their 20% down conventional or trying to do a 10% down vacation home loan. They are very different, the conventional investor loan versus the second home loan. Totally different things. We try to recommend people doing the 20% down investor-friendly loan because it allows you to do more with the contract going into it as a business investment versus going into it where you have to pretend like it's not a short-term rental. So yeah, we've seen a lot of that. What we've noticed with loans is that they've been taking longer to close. So most lenders have been behind on hitting the mark on the closing dates. And a lot of it is blamed on COVID. I don't know if that's really the case. But I know that the underwriters have been requesting things to go back. They want more information. So during this whole COVID process, I've seen loans just a little, not that they're harder to get, but you have to provide more documentation and they're doing a lot more thorough checking of it. Appraisals as well have been a little tighter. I've seen appraisals coming in, a little lower than where they should be. So those are the two things we've noticed really is that they're taking longer to get closed. Appraisals are coming in a little bit lower, but the loans are getting closed. Our investors are doing 10 to 20% down, and we've had no problem getting those houses closed with the lenders in general. As far as Host Financial goes, they have some great programs that specialize in investors looking to buy short-term rentals, and they're very familiar with how short-term rentals work. So, it's important when you're taking in you're buying a short-term rental because these are business acquisitions. They're not just, do we have Daniel on there? Looks like someone.
We do.
Oh, good. So yeah, he can take right over. Hey, Daniel.
We can hear you. We can't see you, but that's okay. We can hear you just fine.
No worries. Hey, Erica. How are you doing?
How's it going?
Good. Yeah, sorry I just jumped right in here. I that seems to be the perfect moment. Where were you guys at in the discussion? I guess it sounds like you're talking about
Appraisal,
loans and things.
underwriting,
Yeah.
taking longer to close is what we've been experiencing.
Absolutely, yeah. So what's going on? You've already covered a lot of it, and you hit it right on the head. Basically, there's a combination of a couple things, like 3 different factors. One is a lot of the markets are hot. A lot of people are purchasing. So, and then also COVID. So the appraisers are backed up. Title companies are backed up. Lenders that had to lay off staff during COVID and now are getting all these new loans are having to hire more underwriting staff. So they're backed up. So everyone's kind of playing catch up right now. So, as much as you can do to make transactions move faster right now is to, make sure that on a purchase, you're hiring a title company and getting an idea of whether or not they're overwhelmed. And then when the appraisal is ordered, just paying that extra $100, $200 to do the rush appraisal, because that can make a difference between having an appraisal come back in 3 weeks or, 4 days or a week. I've had a transaction that closed last Friday, and we were able to get the appraisal ordered on Thursday. He came in on Friday, had the report back by Monday to the appraisal management company for quality control, and we had the report back to the lender within a week. So if timeline is a concern, especially on purchases, when reaching a closing date, definitely pay for that rush appraisal. That's pretty much all you can do in terms of timelines, speeding up timelines for, the loan and lending process. Everything else is kind of, it's hit or miss depending on the lender, depending on where the staff's at, which account manager you get. That's as much as control as you can take, and of course turning in your docs on time.
Thanks, Daniel. Yeah, I know we're coming up on our time here. I just want to call out Alan posted a question, kind of comment, just kind of what you said, Leslie, reinforcing it. They've owned a home for 14 years and never had a problem with parties or neighbor disturbances. So just another sign on kind of the positive outcome of having a short-term rental in Orlando. So
yeah, I don't think Orlando has a lot of party houses. I know there was some news that you had highlighted, but in all the years I've been working this market, party houses has not been an issue. I mean, at least in the premier areas, Windsor Hills, those neighborhoods. I don't know about further out. Maybe they do. Maybe the less you rent in, I don't want to say lower end the home, but if you get a big cheap house, then maybe that's the case. But in the premier areas, I don't think you're going to run into that very often. The neighborhoods are too strict for that.
And it's almost like maybe the media has sounded a little louder than what's truly happened. And that's just a good thing to kind of remember, especially about this market. Really interesting. Yeah. And I just want to ask maybe you, Erica, and Daniel, any final thoughts on just, investing in Orlando as we head into 2021? Erica, do you want to close it out?
I have one thing really quickly is to say, if you're going to get started, make sure you get a realtor, someone like Erica, that knows short-term rentals, that knows the communities that you want to be in, that knows, all of the facts and the figures and the numbers. A conventional realtor who just deals in residents, they're not going to know the ins and the outs. So research your realtor really well to make sure that they know what you're looking for and that they can help guide you if you're new to the area.
Yeah, that's awesome advice, Leslie. And aside from that, investing in general and working with the right team is important. But I would say if you're thinking about investing, whether it's in Orlando or someone else, run the numbers, evaluate it. If the numbers work, then the numbers are the numbers. Jump into it. Take a risk. I think it's always worth it if you can. If you've done your research up front. We have a great performance tool that can help with that. And I know there's others out there. So as long as you've run the numbers on it, you've got accurate estimations. One thing I would say is I wouldn't just go off of what you see on data sites. You really have to dig into each house individually that you're looking at, because data sites offer a very broad, high level view of what's going on. But in Orlando, every neighborhood is run like its own resort, and it attracts different audiences from different parts of the world. That affects rates. That affects how your occupancy is going to look. That affects how you're going to go into that actual investment and what you're going to do to the house. Everything down to whether you tile the floor or put carpets. And those aren't things you can get from looking at data sites. So it's really important to get a high-level overview first, but then you really need to get a granular view of, okay, what neighborhoods do I want to be in, and what do I need to do to be successful in those? And that's really where you're going to be making a good versus a bad investment, not just from high-level numbers. There's more involved. So if you're going into Orlando, it is a saturation capped market. Keep that in mind, that everything has been running for a while, and we know how it works here. And no two neighborhoods operate the same.
Thanks for that. Yeah, and Daniel, we can see you now. So perfect.
Yeah.
If you want to give us some thoughts on Orlando. What would you like to add to close this out on investing in Orlando?
Eric, definitely know your numbers, especially when it comes to the data side of things. I know a lot of particular STR investors use AirDNA, and just knowing now that the projections on that could be skewed lower or higher because of COVID. So the trailing 12 months of data that they're using, it could underestimate the potential value of a property or the potential income, or it could overvalue it. So digging into your numbers, digging into your resources. So for example, if you're going to use a property management company, seeing what their comps do in that area as the evidence to see if it's a worthwhile investment. So yeah, just being more hands-on with your numbers. Then also from the financing side, know where you stand, know what you're pre-qualified for. So when you're out there hunting different houses, you really know what you qualify for, what you can get, whether it's conventional or whether it's through something like us, which is an asset-based loan. And two things that you'd want to know for that are the projected short-term rental income, and then most importantly, you get better rates with an asset-based loan if the projected long-term rental income can qualify. So if you're picking between two different houses in Orlando, and one has a higher, maybe the potential return on an investment from a short-term rental is the same, but the long-term rental is higher, your financing terms likely for that second property with the long-term rental that's higher would probably get you about 1% to 2% cheaper in rates. So that will make a huge difference on your cash on cash return long term.
Thanks, Daniel. That was really helpful. And thanks to Leslie for being our spotlight homeowner and sharing your story. We really appreciate that. And to the Vrolio team, Erica and Melissa, and Daniel from Host Financial. So we look forward to next year and working with you on the investment strategy course too. That's coming together really nicely. So follow us. Those of you again that are new to Astro, follow us at the Astro on Facebook, and you can find us in social, and sign up for our email and check us out. And thanks again to all of you. So appreciate it. We'll talk to you soon.
Take care.
Thanks.
Thanks, guys. Good to see you again, Erica.
You too.